Hello, it is Monday, the 27th of April, 2009, and the market's closed. We had another very choppy session in here today. The NASDAQ finished with a 4-cent gain or 0.12%. And again, like I said, Friday, it looks and acts as though this market, the NASDAQ, is magnetized to that declining 200-day moving average. There's a lot of people looking for this market to fail and fail real hard. I think that the short side of the market is a little bit too crowded, a little too obvious for it to really fall apart right yet. We've still got this trend line intact. We did see a new closing high for the move and for the year with that 4-cent gain. It's low volume once again. Friday, I said it seems as though the market is running on fumes and it's starting to sputter a little bit in here. So while there are still some good long side setups, they remain very dangerous. And the best way to handle the exaggerated risk from a very nervous market is with smaller share size and being quick to take partial profits. I think is always it's something that I've always been doing in this market, particularly on the long side. That is partial profits and smaller share size. It's just not a good time to be greedy. We've got to control those emotions of trying to make it all at once and realize that the market conditions are making it very difficult in here with all of this volatility where we had a pretty good rally in the morning and then it kind of fell apart in the afternoon, but really closed right around that more neutral than anything. And I say that because one, it was only up 4 cents, and two, it's right around that average price, the VWAP that is. We do see that the market continues to hold above this 33.50 level on a closing basis. So this morning's little rocky start did find some immediate buyers and in that 33.50 area. And I think that really the more key level of support, I guess, short term would be $33.40. So we've got a rising 5-day moving average. That tells us we want to continue to be moderately bullish here, and we've got a rising 10 and 20-day moving average in here as well. We'll continue to keep an eye on this trend line, but the NASDAQ is the one market that's displaying the most strength. The volume continues to be lighter all the way up here, and again, it's the only thing that pays is price. That's reason for concern, but you only sell short when the market starts establishing a clear, identifiable pattern of lower highs and lower lows, and we just clearly do not have that here. I hear a lot of bearish sentiment out there, but it's just the evidence isn't there yet. We again have to remain very cautious. We've got this first level of defense at 33.40. Below that, we've got about 32.50, and then of course the bigger level is at 32. So continue to trade very cautiously in this environment. The S&P 500 though was down 82 cents. So this market again, there's two ways that the market can correct, either price wise or time wise. We're still stuck underneath this 88 level. As I said Friday, it would be good to see a push above that level that then fails. That's a potential turnaround scenario. We're getting too many bearish people in here. I think we could experience one more quick violent short squeeze, brings it back above that 88. You get a lot of shorts to cover their positions, and then it could be in a position to fail. So right now, when we look objectively at the 90-minute time frame, what we see here is an inability to continue to get above that 88 level. So we do have, as far as that goes, a lower high. But on a 10-minute time frame, we do have a big mess in here with a rising 5-day moving average, which indicates that it's just, when in doubt, stay out, be on the sidelines, be in cash. Cash is a position, or be very nimble, be very quick, and keep those share sizes smaller. The middle of the range is basically where we close, so 88 down to about 82 and a half. That's the little range that we've been involved in recently. We've got this uptrend line in here as well that kind of adds a little bit of significance in that area, but we're turning more neutral than we are bearish. A lot of people, again, I keep saying it, but it's just the sentiment out there is one of extreme negativity, and it's just not warranted yet. What is warranted is a very cautious stance, because we obviously remain in this bigger downtrend on the longer term time frames. Today's activity You can see here we had seen a weak advanced decline line where the decliners immediately took the lead here early in the morning, but the gainers slowly looked like maybe they were going to recover. And if sometimes during the day, if the advanced decline has been really strong in one direction and it can change, that is, the advancers can move above the decliners, then we can get a good reversal in the markets. But the number of advancing stocks remained very low, under 1,000 for most of the afternoon, and more than 2,000 decliners for most of the afternoon as well. Which, when we have that happen, it just adds to uh, the fact that we're not going to generally be able to turn around on those 1 minute time frames and hold on to gains. So we have to be very careful. On a day trading basis, that is. The S&P 500, again, on this daily time, this 90-minute time frame, we're more neutral. We're in a range. There's nothing here to suggest that this market is going to fall apart very violently the way a lot of people are looking for it to. So trade what you see, not what you think, not what you hear, but what price action is telling you. The Russell 2000 was down 51 cents. So we can look at this 90-minute time frame. You see no damage done. Technically, we've got this first level that should be support near 46. Just below that, a bigger level of potential support at 45. And I think breaking this trend line would get some attention as well. So keep an eye on these trend lines. Keep an eye on that $46 level. But if the market can break out and find, today it found resistance up near that $48 level again. But if it can push past that $48 level, then I think that there's going to be another round of surprised bears who may get squeezed pretty hard. But again, I think we're setting up at some point for a bigger sell-off, but the evidence still clearly isn't there. We have to be cautious. I know I've said that like 5 times in this video, and I don't mean to be so redundant, but really we've come a very far distance in a short period of time, and it seems obvious that we would break down. That's, I think, it's just a little bit too obvious, which is why we don't break down yet, and we have to remain open-minded to the possibility that there might be one more push higher that kind of wears out some of these bears, and they throw in the towel and say this just doesn't make sense, and that sort of thing, which it doesn't make sense, but it doesn't have to make sense. Just like the bird flu stuff, it doesn't make sense that those stocks should be up, and they didn't hold those gains. Yeah, in the financials, it's kind of interesting that this older trend line from the lows is seemingly back in play again after this little shakeout below it. I have been drawing this trend line as well that kind of just takes this low, this one here, and bottom line is, though, here's what we're going to need to see a breakdown. First, a break of this $10.20 level. That's our first potential support area. Then $9.75 obviously was this larger level, but on the daily time frame, that $11.30, when we back this up here on the daily time frame, we can see that the $11.30 level the market continues to hold up underneath that. We have a rising 10, 20, and 50-day moving average. So it's there's a lot of reasons fundamentally maybe to be bearish about this market, but price action isn't confirming that yet. We just have to, again, for the 10th time, be very cautious. I will be back in a couple hours with another video that will update the stock ideas that we looked at yesterday, as well as look at some potential new candidates, and I'll try to keep the number of stocks to a shorter amount than we looked at yesterday. Sundays, we're going to try to kind of set up for the week a little bit, and today I'm only going to post, I think, the A list of potential setups and maybe one or two other ones to look at. So check back later for that. Thanks.